This Week in Finance. Novi 9 to 15, 2025. Markets reopen, shutdown ends and layoff. Fears return. A full recap of Novi 9 to 15, 2025. How US markets reacted to the government reopening, what's happening with tech earnings, and why layoffs remain a major concern. Plus what it means for your money. Hey everyone, welcome back to the channel. Last week was huge in financial news. We saw Wall Street respond to the government shutdown ending, tech volatility, and troubling labor market headlines. Today, let's break it all down. What happened, why it matters, and what you can do. First up, the stock market. One of the biggest developments was optimism around a deal to end the prolonged US government shutdown. On November 12th, investors cheered as lawmakers moved toward a stopgap spending bill. That relief translated into market gains. Financials, energy, and consumer sectors led, while tech remained choppy. On Novi 13, the Dow jumped around 0.7%, hitting a fresh high, while the S&P 500 nudged up and the Nasdaq slipped. But it wasn't all smooth sailing. Inflation worries resurfaced mid-week, sparking a broader sell-off. According to market watchers, stubborn CPI numbers triggered fears that the Fed might not cut rates anytime soon, keeping pressure on growth stocks. So, in short, the shutdown ending brought relief, but inflation risk and lofty valuations, especially in tech, are keeping investors cautious. On the earnings front, one headline grabber was AMD, which rallied strongly after projecting very high data center chip revenues over the next few years. That helped boost the semiconductor space. Investors are trying to reconcile long-term AI optimism with near-term risks. It's a tricky balance. Meanwhile, more defensive and old economy sectors saw rotation money, financials got a lift, and cyclicals became more attractive again. Now, let's talk labor market risk, and it's not going away. October's layoff numbers remain alarming, more than 153,000 jobs cut in that month alone. The worst October for cuts in over 20 years. Much of that is being driven by cost-cutting and AI-related job losses. Tech, warehousing, and corporate roles are among the hardest hit. This isn't just a one-month blip. For 2025 so far, announced layoffs have well surpassed 1 million, raising serious questions about how fast the labor market is weakening. At the same time, hiring is slowing. With fewer new job openings and rising cuts, many fear that we're entering a no-hire job market, where companies are reluctant to bring on new employees, even as they shed others. Putting it all together, we have a political and economic reset. The government reopening removes a major drag, but the labor market is flashing red. Layoffs are accelerating, and growth-driven sectors are under pressure. That's a dangerous combination. For businesses, this means potential lower consumer spending, if people fear for their jobs. And for investors, it could mean higher volatility, especially in growth and AI-related names. So what should you be watching and doing right now? Here are some risks. If layoffs continue, consumer demand could weaken, hurting corporate profits. Inflation could remain sticky, keeping the Fed from easing. Overvalued tech names may face renewed correction if interest rates don't ease soon. What are the opportunities? Defensive sectors, financials, healthcare, consumer staples might offer more stability. If the shutdown truly ends, there could be some reopening trades. For long-term investors, dip buying in high-quality AI, semiconductor plays could pay off, if you're selective. If you're managing personal finances, reassess risk. Look at your portfolio. How exposed are you to high-growth, high-valuation names? Strengthen your safety net, more layoffs could be coming. Make sure your emergency fund is solid. Stay updated. This isn't just a passing week. These themes, holes in job market, inflation, valuation risk, may persist. Think long-term. If you're investing for 5-10 plus years, episodes like this may be buying opportunities, but only if you pick wisely. In the coming days, here are the key data points and events. Look for fresh economic data, unemployment, consumer spending, inflation reports. Keep an eye on how earnings evolve, especially from big tech names, AI plays, and infrastructure-linked companies. Fed commentary. Any signal from FOMC members about future rate direction will be very important. Political risk. Even though the government is reopening, there may still be volatility or surprises. To wrap up, NOV 915 felt like a reset week. The shutdown ending was a relief, but the deep labor cuts and inflation worries are real headwinds. For now, it's a time to be cautiously optimistic, but not complacent. If you found this recap helpful, hit like and ring the bell. I'll be tracking what happens next week. Drop a comment below. How are you positioning your money after this week? Thanks for watching, and I'll see you next time. Subscribe for more financial truth.